Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 18th of October here in 2022. We are seeing earnings in focus, and tonight's video will pinpoint some of those. Let's get started with the big picture and then drill down to the individual sector, and under the sector, which stocks are in play. Let's start with a few minutes ago until today's closing bell. In general, the S&P is up 1%. The Nasdaq also, really all four of our equity products, equity futures, are up about 1%. And that was bigger in the morning session. We had a reversal off the gap up, but just getting back to the big picture, we are seeing our risk reversal. What is a risk reversal? It's just the thought process that when the market is rallied or has rallied into resistance, the last two times we're up here, the risk of additional upside action is small compared to the reward of the market falling back from the upper trend line channel or the downtrend back to the lows. Similarly, when the market's under or into support levels or into the bottom, not going to be perfect, but the risk after a big sell-off, the risk of additional sell-side action is low versus the reward of playing a bounce. So that's where we're having what we call and the same logic took place over here, where the risk of additional downside action after a lengthy sell-off just wasn't worth the additional play. Or you might see the juice was not worth the squeeze of getting short at lows, nor is the juice worth the squeeze of getting long at highs. The juice is not going to be worth the squeeze to get short at new lows. And therefore we have what I like to call a risk reversal. The risk is now to the downside and the reward is to the upside. Again, not making predictions here, but just noting when markets do get overextended, even in a bear market, even in a downtrend, that's still in play, the risk of additional sell-side activity becomes high, and therefore we flip the risk, and therefore the reward is to the bull side. That is going to be generally true in the Nasdaq, and we see that its turning points. Think about these as declining trend line channels, where the market has a little bit better odds to come up away from the bottom. And that's where we are in the 1050 in the Nasdaq. For that S&P, it's a really big weekly chart level. That weekly chart level was here, has been here, and has been a very long-term target. That's about the 3550 or 3500 in the weekly SPX. It's also the moving average, but also a prior high from late or mid 2020. Now back to the Nasdaq, it's similar, although a little weaker. Tech stocks have been hit harder in this rising interest rate, rising inflation environment. That's true for the Nasdaq as well. The Dow mini futures is still at those lows, still coming off these support levels, and that for the Dow was 29,000. And the Russell is back to where we were in 2018 and 19 when the market peaked ahead of that COVID crash or the pandemic lockdown, the recession that was triggered rapidly from there. That spot level was about 1650, and again, these are resistance points that have now come into play. Now that's a big picture, very big picture. Now let's get back to the daily chart and discuss some of the earnings plays. So what else is happening beyond the equity market short-term bounce? It's crude oil. Oil is down 3% today. Let's take a look at that. Oil being down 3%, which is coming down off of a pivot or retracement from about 92 or 93. And we're seeing new lows take place in crude oil on a continued short-term bear move. The bond market, we'll just go and quickly update some of these. The TLT and the ZN and the ZB, they're all at new lows for 2022. As the rates go higher, bonds go lower. These are, again, things to focus on the big picture. And that 40 still represents 4% for the 10-year Treasury note yield. 4%. And that's up from about 1.5% at the beginning of the year. So that is a stellar percent gain from about 1.5 to 4, doubling, more than doubling. And of course, that's one reason we're seeing pressure in the equity market, because interest rates have rallied so quickly, so fast, so quickly. And that's put pressure again in the ability to get capital, to get loans, businesses, corporations, home loans, equity lines of credit, etc. Anything that has to do with credit will be more expensive at this part in 2022 as compared to the earlier part. And again, those trends continue in those markets. Now, let's switch gears. Before we talk about which stocks have earnings, which stocks led the gain in today's session. Just a quick note, Lockheed Martin is up 8, almost 9%. Behind it is retail name Target, Salesforce.com, General Dynamics, and we have a few financials which had earnings this week, some of them better than expected. Bank of America, American Express, Morgan Stanley, and we'll scroll down the list to see JP Morgan and a few others, Capital One Financial, BlackRock. And again, we had in last week's video a focus on financials because they reported earnings and they all are in play. Financials is the almost number 2 sector. Utilities are up now. Let's discuss sectors. Financials are up 1.5. Utilities up 1.6. Materials up 1.8. The big leader, and maybe a surprise leader in today's session, is XLI. That's the industrial sector. Now let's talk about stocks that have reported or will be reporting earnings. First up is Lockheed Martin. It's up again 8%. Why is it up 8%? Earnings play, but to me, this stock is in a sideways trading range. That means we have long or buy or potential call spread opportunities at the lower bound of a sideways trading range, and the target being the midpoint, or maybe trying to rally all the way back to the top. That's just a box. Think about a box. Think about it as a rectangle where the longs are favored at the lows and the shorts or bear type positions are favored at the high. And that is our bell curve, or the distribution. Puts the target in this particular example and stock at about 390, 422 or so, and about 460. So it had its earnings. And just a reminder, if you want to look a little deeper into the earnings and what the plays were, what the report was, whether it beat the street estimate or missed the street, of course, we can always look at the fundamentals of any of our stocks here in the Analyze tab. We have the earnings, fundamentals, and the like. Just digging a little bit deeper if you want a longer term perspective on some financials or earnings or PE ratios and other opportunities that might be available for something longer than a brief short-term 1 to 5 day window trade. Lockheed Martin reported, as did Goldman Sachs. Also off of a support bounce, that's about 290 per share, and we see it has or is holding support at those levels. Behind it, Johnson & Johnson. These are a little similar in logic, but they did have their support levels in play. For Johnson & Johnson, that's roughly 160, and I would even say beneath that about 155. Think of this as a support shelf. This is a resistance area, and little things in the middle, and again, prior highs and prior lows. That's just spots to put on risk or take off profits, build out spreads, build out opportunities within these, maybe even call it a ping pong. Ping pong is just playing back and forth in a sideways trading range. Now, these stocks so far are not showing a downtrend or uptrend. Many stocks are showing downtrends. These are not. A stock that is showing a downtrend and is releasing earnings at this moment is Netflix. Now, the others have already reported, and what you can view or take trades, it's already done at this point, but we would look at those expected move logic. This takes us back to butterfly type trades, and that would put a 175% implied volatility. That translates to a $30, roughly 70-cent move up or down for Netflix. Now, can we see, is there an earnings reaction taking place now? To look at that, go in and show the extended trading hours, and we do see that move. Again, just quick reaction here, $30 up or down. That would place this stock right to where it's trading. How might you do that? Take the expected move up or down $30, and that will take you right here into about 270 per share. Nice that happened live right with us at the end of the video, at the end of the market close. But it could have gone the other way, and that would have been a $30 expected move to the downside. That's something we'll be watching, that 270 price point that just got hit to the penny. We'll look at that on Wednesday's session. It'll be a pivot point for tomorrow. Now, other stocks that are or will be reporting earnings and will be in focus. By the way, there's Netflix. It's trading up currently to 270. That may change, and again, this video takes place right at the market close. Could be very different by tomorrow. Coming up, we have Abbott Laboratories. We have Procter & Gamble. Those will open pre-market with earnings. The ones I think we'll all be watching, perhaps trading and discussing here live at TheoTrade. Tesla. Tesla will have an earnings-based expected move of about $18, but 112% implied volatility. That's going to be different tomorrow at the close, but that is how it stands currently. And the last will be IBM. 80% implied volatility, near-term expiration, $7 up and down. That is, again, another sideways trading range. These will be in focus, as will any headline news and anything we're watching beyond these earnings. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for October 18, 2022.